All right, Bulls and Bears back with another dose. You're watching Bull Boom Bear Bust. My name is JJ. A lot of news to get caught up on today, folks. Things are continuing to head into the danger zone for most U.S. consumers. That's the average worker, the bottom 70% living paycheck to paycheck. Well, things are about ready to get a lot harder for that particular group of people. If you're one of the people that's 7 out of 10 people living paycheck to paycheck, things are about ready to get a lot more difficult and a lot more costly and expensive. If you're in the top 30%, especially the top 10%, things are going to be looking better than ever. You're going to have opportunities to make much more money than ever. All right, but let's get into the latest news here and some data, and we're going to hear from some individuals giving their take on what's happening with the economy. I had a client earlier that described the economy as being gross. This was somebody about 32 years old, renting, has a roommate, feels like they're never going to buy a home, and this person's 32. I remember being in early 20s, like 21, 22. I remember thinking to myself, okay, by the time I'm 32, I'm probably going to have my house paid off. Now we have people that can't even think about buying a home in their early 30s, right? The average home buyer right now is age of 40, and that number keeps getting higher because it's mostly the older people and especially the baby boomers that are buying a lot of the houses right now. Right, as far as individuals. But let's get into some news, folks, and we've got a lot of other people to hear from. I think you're going to find this very interesting today. Please give it a like, and let's get into it. Well, the November numbers are out, and they're looking pretty ugly, folks. A first look, November hiring shows private sector lost 32,000 jobs. Small businesses are starting to crack as the weakening economy and rising costs turn consumers off to spending. Now, we heard that record spending occurred across the holiday weekend there, Thanksgiving, Black Friday, Cyber Monday. Why do we hear that? Well, actually, less people went out and spent money. More people chose to not participate in the shopping, even though a lot of people still did. But compared to previous years, it was less numbers of people shopping, but things cost more, so record spending because of that. Also, you have the top 10% that make up about 1/2 of all the consumer activity, consumer spending. They're spending more than ever. Like I said earlier, top 10%, top 20, 30% doing very, very well at these times. But job losses were hugely driven in the private sector amongst small businesses. So again, the big companies, the big box stores, the national retail chains doing very well, some of them better than others. Some of them not so well. Target had some struggles, but they're still making money. I mean, let's be honest. They're not going to go out of business. But the small businesses are the ones that are having the hardest time right now. We're seeing a lot of layoffs also with small businesses, a lot of closures as well. And to make matters worse, they're doing whatever they can, the powers that be, the banks, in this case, making loans easier to get. Now, we're looking at next week, probably another rate cut. We're looking for a Santa Claus rally. With the central bank possibly lowering the rates. That's my guess. I mean, if you think different, let me know down in comments. But I think with these levels of debt right now and the activity, even though they're saying record holiday spending, because of the reasons that I just laid out, the reasons why there was record holiday spending, I think they're going to be looking for an excuse to juice things up, and I think they're going to lower rates. And we know that they're looking at a 50-year mortgage now to get more people into these overpriced homes. Right? They're looking at scrapping the minimum credit score, like it says right up here, Fannie Mae, which backs about 1 in 4 loans right now. Scrapping the 620 minimum score. It used to be you had to have at least 620, but things are so bad right now. Credit scores are so banged up that they're scrapping that. And now there's not going to be a minimum credit score, right, for these loans. So that means more people qualified for loans. Again, they're trying to keep the bubble inflated. Instead of finding ways to fix the affordability problem or the affordability crisis, as many are calling it, they're just looking for ways to bring more people into the market to buy these overpriced homes, more credit card limits for people to go out and get further into debt. So it looks like economic activity is still expanding, when really people are just getting stretched thinner and thinner and thinner in their budgets and financially.
The skyrocketing cost of living has left millions of people working at full-time jobs or a number of part-time jobs still unable to afford a place to live. Ali Rogan is back with her conversation with journalist Brian Goldstone, author of There Is No Place for Us, about this growing nationwide crisis.
Thank you so much for joining us. In your work, you've come to know many people who work, who may have more than one job, but have come into circumstances where they cannot afford to keep a roof over their heads. Certainly, each person has a unique story, but are there any common threads in their experiences that you've been able to identify?
Yeah, absolutely. I do argue in my book that in cities across America today, in one city after another, a low wage job really is homelessness waiting to happen. And what they have in common is they all belong to the low wage workforce. And it's not just that their wages are too low to keep up with the skyrocketing cost of having a place to live. It's also that the jobs themselves have become increasingly volatile and precarious, where they often don't know how many hours they're going to be getting from one week to the next. Their employers give them 29 hours a week because at 30 they would be eligible for basic benefits like health insurance or sick leave. And yeah, the cost of housing, rents are just very, very quickly outpacing what their incomes are. So that's kind of the backdrop that defines these people's existence.
Folks, a lot of stuff we've already talked about here in this channel. I get it. Some of you are thinking that, but it's always good to hear from another source and another face here. Let's continue, then we'll talk about it. Then we've got some other big news to get to on the other side.
For a long time, the stereotypical perception of homelessness is that it is something that happens to people on the fringes of society, and that may have never been accurate. But what have you found out in your reporting about the reality of what it's like to be without a home?
Yeah, I mean, one really astonishing truth about homelessness in America is that what we see on the street is really the tip of the iceberg. There's this entire world of homelessness that is out of sight, that has been rendered invisible. And within that shadow realm of homelessness, as I refer to it, it is overwhelmingly populated with people, again, who are part of the low wage workforce, who families with children. And these are people who are working and working and working some more, and it simply is not enough to secure one of life's most basic necessities, a roof overhead. I mean, to be sure, in the richest nation on the planet, nobody should be without housing. But these pernicious myths and stereotypes that homelessness is just caused by addiction or it's just caused by mental illness, it really is not borne out by the reality on the ground. And indeed,
All right, sorry, I've got to pause it here, folks. He said something that I need to kind of explain and maybe even debunk. He said the richest nation on the planet. I think most of you might know this, but let me just repeat it here for anybody that's new that doesn't know. The reason we seem like we're the richest nation on the planet is because we have the most debt. The USA is the world's largest debtor nation, right? So the same way that a person that borrows a lot of money or runs up credit cards will look like he's doing well financially, maybe a new car, maybe new clothes, a lot of debt is behind it. That's true with the country as well. We're not the world's richest nation. We have the world's deepest debt is the reason.
often mental illness and addiction is a consequence of this form of insecurity, not its cause.
Can you tell us a little bit about what the lives of the homeless workers are day in and day out? And also, do those lives get harder during the holidays?
I think it's really easy for terms like the housing crisis or the homelessness crisis to become kind of abstract and to lose touch with just the acute human toll of this growing catastrophe in America. You know, what homelessness looks like today isn't just the person sleeping outside the parking lot of a convenience store or a Walmart or a Target. It's often the very cashier or worker stocking the shelves in those stores. And they often have children at the end of their shifts. They don't know where they're going to be going. They have to tell their children, I don't know where we're staying tonight. Maybe they're sleeping in a car in that very parking lot. And, you know, there's a term that public health experts use to refer to the kind of stress that children and parents are exposed to in these circumstances. And that term is toxic stress. This is stress that is so chronic, so debilitating, that it can fundamentally alter a child's long-term development. That is the human toll of this insecurity. And it is the consequence. It's the toll of what has happened when millions, not hundreds of thousands, but millions of families in this country have been flung into what a case manager in my book refers to as the housing Hunger Games.
You've cited a number of deficiencies across all sorts of categories that are failing people, but what institutions here need to change? Is this a failure of government, of industry, all of the above? How do you see it?
Yeah, I think it is all of the above. What I found in my reporting in the course of kind of immersing myself in the day-to-day lives of 5 families here in Atlanta where I live over a period of nearly 6 years, it's not just the housing system, which, prioritizes profits above all else. It's not just work and jobs and wages that aren't keeping up with the cost of living. It's also other systems like healthcare, a lack of affordable childcare, the education system, food insecurity. All of these systems sort of collide to make this human disaster not just possible, but in many ways predictable and inevitable.
Brian Goldstone, author of There Is No Place for Us. Thank you so much.
All right, folks, there you have it. So you don't often hear that level of, I would say the word negativity, but I would just say reality. You don't often hear that level of reality on the evening news, right? So we wanted to play that clip, but let's hear from a few other just people just trying to get by, cost of living too high, can't afford much, can't afford anything in some cases, scraping by. Take a listen.
You might think, I bet she's upset about something legit. No, I'm crying because my Starbucks this morning was almost $10 and I just can't afford it anymore. And that sucks.
Folks, I thought she was joking at first. She's crying about the cost of Starbucks. Now, it sounds like $10. She must be getting like a tricked out drink with a bunch of different extras and probably maybe a breakfast sandwich. I don't know. Well, probably not, because it would probably cost you more than $10 at Starbucks. I thought she was going to start laughing at the end, but she is literally crying, folks, over the cost of Starbucks. And at the beginning, she said it's not something legit. Well, if you're hooked on coffee, if you're hooked on caffeine, it's legit. And if you can't make your own coffee at home, it's legit. A lot of people don't have a way to make coffee at home, believe it or not. They live with other people. Some people rent a room and they don't even have a kitchen. And I'm not sure what her situation is, but the fact that people are crying over the cost of Starbucks is outrageous. I mean, it's pretty mind-boggling, actually. And a lot of you are probably saying, just make coffee at home. Just buy coffee at 7-Eleven, right? Dunkin' Donuts, pretty good coffee, right? Out of the little different flavored pots and all that stuff. Pretty much any gas station, right? So if you just need caffeine, go to a gas station. Why are people crying over Starbucks? What's so special about Starbucks? To me, it tastes burnt. If you add the right milk and flavoring, sure, it could taste great. And I've gotten Starbucks many times, right? Especially late at night when there's nothing else around. You're on the road, you're driving, you just want to stay awake. Or you get a coupon, buy one, get one, stuff like that. I try not to go there too much, but I've been there, I won't lie. People are crying, folks. I mean, explain this to me. How does this happen?
I'll take, but I don't know how these apartment complexes are justifying their rent prices. I have to renew my lease or move soon, and this apartment hunt is honestly extremely stressful. I'm even looking at apartments that I used to live at years ago, and the prices are even higher, and they're not even upgraded. They're the same kind of renter quality. Like, at least if you're going to increase the rent so dramatically, please make dramatic changes because it's not justified. This kind of ties into the economy right now and how prices are going up for literally everything, but income and salaries are not.
All right, folks, let's talk about this one. She's frustrated at the rents and how the property owners
and this apartment,
how the property owners are not making the upgrades, but still raising the rents. And she's asking, please make the upgrades, folks. It's not going to happen. If landlords can rent out a slum to you with 0 upgrades and still raise the rent, they're going to do it. Why? I'll give you 3 seconds. Because people don't have much other choice. They're priced out of the housing market. They're backed into a corner. Their backs are against the wall, whatever you want to call it. And there's not enough housing out there, and there's too many people. All right, not enough housing, too many people. And until something significantly changes, structurally changes, this is going to continue. Landlords will continue to raise their rents, and people are going to still scrape by, borrow from Peter to pay Paul, go into debt to be able to afford these high rents. And it's not going to stop, folks, unless something drastic changes. But, of course, just like we talked about at the beginning, they're making things easier. They're trying to inflate the bubbles even bigger. In other words, the cost of living is about to go even much higher from here.
Grocery prices have gotten legitimately out of control expensive. I live in New York City, which is already a very expensive area. I'm also a financial planner, so I see people's budgets all the time. And no matter where people live, I have seen this consistent pattern of grocery prices eating up people's budgets and becoming more and more expensive over time. Like, here are some videos of prices that I took in my grocery store a couple days ago. I know that produce is typically expensive, but these prices are beyond what I have seen. Even like for staples, it is so unbelievably expensive. And I think it's so important to continuously talk about just how bad inflation has gotten for a lot of people, because it is specifically hitting these industries and sectors that people have to pay for. You have to pay for food, you have to eat, it's a non-negotiable expense. And you also grocery shop frequently because you have to keep buying food. And so again, it's a very visceral thing where people are seeing these high prices over and over again and are having to adjust their budgets accordingly. High grocery prices are affecting everybody, but they specifically affect lower income people more because a greater percent of their income is going towards groceries. And when your grocery bill increases drastically, that leaves less room for other things like paying down debt, saving for emergencies, just like having a good financial foundation. And I think this is just another example of how we're seeing this K-shaped recovery where lower income people specifically are really, really struggling in the economy. And we're seeing in the headlines how, yes, people are cutting back, but there's certain things that you can't cut back on, like food. You have to buy food. And so I think we're going to continuously see the repercussions of people whose budgets are completely stretched and are just struggling to afford just putting food on the table. And that's why I think it's important to continuously bring this up and how these larger forces are affecting people's day-to-day.
She's basically saying and sounding a lot like what we talk about here. Things are about ready to get worse. Things are going to continue to get more expensive. Nobody knows a way that prices are going to fall or that the cost of living is going to come down. And typically when prices come down or get a lot lower very quickly, it's because if it's on the back, it's usually because it's on the back of some sort of financial crisis like the banking crisis in 2008. But if banks are still lending, people are still going to be spending, and therefore the cost is going to go higher. But take a look at how another individual described this. Take a listen.
Complaining about the increase in prices across everything, but I don't think they're ready for the decrease of prices. What we really want is prices for shit to go down while their salary stays the same or goes up, which is next to impossible to achieve. Japan is the perfect example. The reality is this: if prices are coming down, it's because something like 2008 is happening. The entire world is crumbling, jobs are being lost, everything is losing value, your house is losing value, everybody's becoming poorer, and companies are forced to drop prices because that's the only way they can survive. Here's the craziest part: inflation is then bad on everybody because of government debt, meaning the government will be able to make less money out of taxes because less people are working, less people are paying taxes, which means that they're forced to borrow even more. All of this while we have $37 trillion in debt. The story of the average American in heavy debt because of stupid consumption and lack of responsibility over their actions and purchasing shit. And you guys complain about your government, but the average American is literally behaving like the government. Echo to the discussion of deflation. Perfect scenario that people would want, that requires sacrifice across everybody, is a government that spends less and is responsible. Prices that go down. People accept that their salaries might go down too. Perfect scenario is salaries going down less than the prices of goods, which means that companies would also be accepting less margins on their products. This would require a government that is responsible, companies that are okay to cut on their profits, specifically shareholders and owners, as well as employees accepting lower salaries. In a world that is based on greed and growth and continuous growth, and if I'm not growing next year, I suck, that is next to impossible. What you as Americans will keep on doing is kicking the can until shit goes so bad that you're gonna have another 2008, which is probably gonna be worse than 2008. One main difference: millennials and Gen Z are the weakest generation in the history of the United States, which means that they're less likely to rebuild like our parents did in 2008. However, if you are a strong Gen Z and millennial, then you got it. You're gonna win. You're gonna win because your competition is inexistent.
There you go, folks. It describes Americans pretty well, doesn't he? Acting just like the uncontrolled spending that led up to the $37 trillion in debt, $38 trillion now. It's hard to keep up. And it's true. It's true. The financial crisis was brought on by the banks on the brink of failure. Remember, the banks had to be rescued, right? when it's harder to borrow money, the economy comes down. So if these banks are to loosen lending, that creates the boom. If they tighten too much, making it much harder to get loans and borrow money, then prices will come down. But they're not doing that, folks. They're making it easier, eliminating credit score requirements, of course, lower rates, making it easier to borrow money, right? Even though rates are higher than they were a few years ago, people are still willing to take out loans and borrow at these high rates. So therefore, you still see consumption, people still buying cars and everything else, prices still rising.
Prices just hit a record high of $1,000 a month. That's up 10% from just last year and up 40% since 2019. And the wildest part, no politician has any solution. Nothing.
Yeah, you heard her. She also said it. No solutions, folks. No solutions. Just band-aid on a broken leg, kicking the can down the road, as many called it. So what do? Now is a very important time to pay especially close attention to the economy. Look for things to invest in. If you're like me, you're still in the markets, but you also have something out of the market to take advantage if and when there's the next shock or the next economic collapse or crisis that occurs that does bring prices down. Because if prices come crashing down and you're 100% invested, meaning you have no cash on the side, you're not going to be able to take advantage of any buying opportunities. But if you're in the markets, and that means you're still making money as prices continue to go up, as markets go up, precious metals, what have you, whatever your investment is, housing, real estate, then you're making money, but yet you still have some money on the side to take advantage if and when the correction happens. I think there will be a correction at some point. There will be a crisis. Something's got to give. Something's got to break. It's taken much, much longer than anybody expected, but that's okay. If you're invested, you're still making money. Not as much as you would have made if you were all in, but I don't recommend going all in. I shouldn't give any advice here, but that's just not the way I do things. I prepare for the worst while still trying to make money on the other side. Now, the biggest complaint I get is, hey, JJ, we don't have any money to invest. We're barely scraping by. I get it. A little bit at a time, right? I take a little bit out of each paycheck and I invest it, not just the 401k, but actually in the stock market through my brokerage account and invest a little bit. Digital assets, some stocks, even some ETFs, but I'm in ETFs very short term. Anyways, let me know down in the comments what your investment strategy is during these times, because it's so unpredictable, but we do know that inflation is likely to persist unless we get the shock situation where crisis 2.0 evolves or great financial crisis hits again, and we see, something globally break out like 2020, you know what I'm saying? So let me know down in the comments, drop a comment for us, and we'll see you in the next video. Make sure you're subscribed. Give us a like to help keep us alive. Thanks everybody for being here. Bye for now. Peace.